Byron, good morning. So,
thank you. Great to be back, despite the circumstances.
Yeah, despite the circumstances, tough times in so many ways. But
Indeed.
My overarching question is this an Amazon 2001 moment? And of course, around September 2001, Amazon was at about the equivalent of $6 a share. It's $2,800 right now. But how do we know when we've gotten there with the software names that are going to survive into the future?
For those who are willing to look medium to long term, we absolutely think it is. This sector has just been pounded, and yet the macro trends remain very much intact. Over the prior years, as I've been on this show, we've talked a lot about these super high quality names at admittedly pretty high multiples and had this discussion of, how far can they run and when do they grow into the valuation? Now you continue to have these extremely high quality names, but they're on sale across the board. The median is down about 53% in this basket. And yet you still look at these growth rates north of 40%. You look at positive free cash flow. You look at these compounding dynamics with the new economy and the move to cloud. They're all intact, which makes us think if we're not at the bottom, we have to be close to it because the value opportunities here, both defensively per the prior discussion and offensively about the big opportunities, still remain intact.
Yeah, have to is strong language, though. And so I wonder what represents the floor here, value-wise? What's going to keep them from going a little? Because you might have said, 30% down. Boy, that looked awfully bad, like a buying opportunity. But now we're like 50% down for a lot of these. So why not 70?
Hey, so I think it's a relative question right now for short-term traders of where to put dollars, and we're seeing a lot of volatility, and that's where plus or minus a handful of percentage points or weeks or months here. That's a trader's decision more than an investor's decision, and I can't comment as much on that. When you look medium to long term, though, these companies have compressed from the 25x multiples down to below 12x revenue multiples. And again, they're still growing at 40% growth rates. And so if you look at just out over the course of this year and say, maybe the multiples can pull back, another turn or two, and yet these businesses should grow through it. And so it's quite possible that there could be more multiple volatility. And yet with these growth rates, if you look out, I think it's highly likely that the stocks will end the year higher, even if they absorb some more chaos because of the macro geopolitical and microeconomic situation we're all seeing.
Byron, it's Deirdre. How do you pick through the sector? I mean, how do you know what's an Amazon and what might be a Cisco? Important companies in the future, but may never sort of regain those highs or their value.
Yeah, so I think there's two answers to that in terms of how we're looking at investments right now. The first is on the company-specific level, and that's very much through an efficiency score filter, which is this interplay between growth rates and capital consumption. Really, what we think of is a modified rule of 40. Instead of revenue and GAAP EBIT, we're looking a little bit ahead to the subscription revenue growth rate or the annual recurring revenue and how that relates to the free cash flow. That's the company-specific level. And then on the sector side, we're looking at some of these sectors that should be a little more resilient to the economic pullback, inflation, those elements, specifically cybersecurity, DevOps, infrastructure, categories that, if anything, maybe have lagged because of the IT distraction for the COVID response. And now there's almost this infrastructure debt that organizations have, and they have to catch up to that as people come back to the office and as these businesses come back online. And we think that could be a pull through that could weather this in a more stable way.
So, Byron, give us some of those names then, if you can, out of your basket on the company side. Which are the ones that sort of satisfy those criteria that you do think will eventually perhaps get back to those highs or could have reached the bottom?
So I look at like a SentinelOne, I look at a GitLab, I look at a DigitalOcean that's been more resistant across those categories. I also look at some net new category adds that have come into the index with new additions. We added 20 companies over the last month, which was the largest addition in the index history. The major buckets there overlap with some of the segments I talked about before, but specifically I'd add enterprise SaaS and vertical SaaS there as well. Vertical SaaS is extremely resilient if you have categories that can withstand that. Companies like Procore and Disco and Toast have seen a lot of business growth going forward, and I think with the efficiency score dynamic could be successful names here in the coming quarters.
Byron, how do you think investors should strategize when it comes to the names that serve small and medium business specifically? There are several of them on this list that either really focus in mainly on small and medium business or are SMB friendly? And there's been this shift over the past couple years in SMB mindset, it seems, toward wanting more digital processes and understanding that that's an important part, not just of planning for the future, but having resilience and capability in their business should a shock hit. As an investor, how should you categorize and strategize around SMB?
So SMB has been one of the biggest beneficiaries of this move to cloud, as you suggest. They no longer have to have mediocre, downloadable kludgy software. They can actually have best-of-breed solutions with internet integrations across multiple apps. And so we absolutely see that as one of the compelling growth areas ahead. The things that we look for, though, is exposure, higher churn rates. You often have this dynamic with lower acquisition costs, but shorter customer lifetime values. And so we're sensitive to that motion of upsells, renewals, retention, seeing this healthy dynamic across SMB businesses where maybe they start with an application and then they cross-sell payments, as was the case with Shopify, with Toast on the private side. Service Titan does that. We'd love to see these sticky businesses that can help the SMBs where they can run their entire business often on these applications. And you get this multi-pillar strategy that goes from desktop to mobile. It goes from application to payments and fintech. And we're looking for more and more of that. And you will see more constituents of the index added in the coming quarters as more of those great private companies make their way into the public universe and add to this emerging cloud basket.
Hey, finally, Byron, we're seeing a lot of weakness, especially today, not to get too granular, of apparel retailers, especially those with a lot of exposure to Europe, PVH and Ralph Lauren, for example. Where does it lead us to thinking in terms of e-commerce and names in e-commerce that are highly exposed to apparel, for example?
Yeah, there's certainly some real exposure. They've had the supply chain hit on one side, and then there could be a demand chain hit here on the other. And so really, we think of that category by category. We look at the companies that have lower acquisition costs because they have organic traffic through name recognition and unaided recall. And we look for protected, insulated verticals that may be a little more resilient, both geographically with distribution and supply chain benefits, but also sectors that may be a little more resilient. But it's a tough slice within tech land right now. And as you note, across all sectors, not just software, not just e-commerce, hypergrowth has been hit disproportionately. And when people get fine bottom and when you get this defensive mindset going, we think that there could be a little bit of greed that kicks back in from the offensive mindset for these names specifically ahead.
Byron, love that detail you gave us. Byron Deeter, thank you.
Always a pleasure. Thank you.
Meantime, more companies, including Netflix, suspending services in Russia over the weekend. The company has about 1 million subscribers there, which is a relatively small percentage of its 222 million global members. TikTok also taking action, suspending new content and live